Hello, everyone. It's Stephen Whiteside here from the Uptrend.com with this weekend's edition of Protect Your Portfolio. Well, it's Sunday, November 24th, and I guess we're going to have to start updating these little pictures here. I understand from watching the news this morning that some people got some snow this weekend. So we haven't got any snow here so far, but I guess it's coming and we can't stop it. Let's start off with a little housekeeping. We are having a Black Friday sale on right now. If you're not a member, you can get 30% off any membership. If you're a current member, you can upgrade from a monthly and yearly membership. You can upgrade from a monthly to a yearly or a 5-year. You can upgrade from a year to a 5-year membership and save 30%. If you want to upgrade from your current membership, just drop us an email. We'll send you the correct links and all the instructions. And of course, if you have an outstanding balance on your current membership, we will refund that to you. Now, we do have a new email address. We still have all our other email addresses, but we're starting to use this one to send out newsletters. So if you could please add newsletters at theuptrend.email, if you could add that to your contact list, that would be great. And we have a new North American phone number. We had some local numbers and an 800 number, and we were just getting too many spam calls every day. So we thought we'd amalgamate them all into one number and try to make it a bit more manageable to avoid as many spam calls as possible. Now, on Saturday, we updated the website with over 32,000 new charts. So that's daily, weekly, and monthly charts for all the symbols in our database. For each symbol in the database, we actually have a library of 15 charts. And what I'm doing here in this presentation, of course, is a top-down look at the stock market. And we're not, taking too deep a look at any area. We're trying to help as many people as possible keep on the right side of the major market moves. So if you need to drill down, if you need to investigate further on any particular symbol, that's why you need a membership. Now, we'll start off looking at the VIX and the Fear Index, and it is still on a weekly sell signal. It was down on the week by 5.58%. Things would change this coming Friday if the VIX were to close above 2114. Now, it was trading in the channel and above the channel all throughout the week. We're still waiting for a buy signal here on the daily chart. That would happen on Monday with a close above 1731. Now, last week at this time, we were looking at the U.S. market having a bearish reversal week. And as I mentioned, those signals stay in play until we close above the previous week's high. Not many symbols did that this week. In fact, for the most part, it was an inside week, especially for the S&P 500 and for the NASDAQ. Now, the S&P 500 is still trading below the $600 level. The NASDAQ 100 traded above and below the $500 level this week. So we're still attached to that $500 level. That has not changed. So those are the big round numbers we're watching in that part of the market. It was all about NVIDIA this week. They came out with earnings. For the last 3 weeks, we've been trying to break through 150. This week we traded above it, but then came down, ended the week at 141.95. During the week, we got down to the 137.50 level, and so we're in a range right now, and we closed below the midline of the particular range that we're in at the moment. So that is looking pretty bearish. If we start breaking down below 137.50, then 131.25, and then 125, which is not only a daily but a weekly target for NVIDIA. Now, we're still on a weekly buy signal here. That has not changed. We did not close below the previous week's low. We were only down 3 cents on the week. So while people may be disappointed by the earnings, they're not that disappointed that they're sharply selling off the stock. So we'll just keep an eye on that and see which way NVIDIA trends going over the next couple of weeks. Now, for the Magnificent 7 ETF, it was up 1.15% on the week, having an inside week. So that is a pause week, a week of indecision for the Magnificent 7. Now, we always like to watch big round numbers, and one of them we're watching right now is Bitcoin, and it hit $100,000 on the futures contract on Friday. I think it was at 2:34 in the afternoon. It hit a high before pulling back and closing just under the $100,000 level. I don't know if this is going to be the end of this particular move for Bitcoin. You can see last time we had a nice big move up to the $75,000 level. We did pull back for a couple of months before breaking through that and continuing to move higher. Will we do that this time? Well, only time will tell. If we do break out, then 112.50 and 125,000 would be our next targets to the upside. Now, looking at the Canadian stock market, we made a new high for the iShares for the TSX 60, up 1.16% for the week. At the same time, the overall Canadian stock market, using the Vanguard Canada ETF, was up even more, up 2.23%. What worked this week? Well, we had gold stocks up nearly 8% on the week, still on a weekly sell signal, no change there. No change for materials, up nearly 7%, and energy stocks still on a weekly buy signal, up over 4%. Now, a pullback in Shopify may have been the cause for the discrepancy between the TSX 60 and the TSX itself. Shopify ended the week down 2.22% and had an inside week. So Shopify is such a big stock, it can certainly throw its weight around, especially in the TSX 60. Now, looking at the seasonality charts and starting off with the S&P 500, we're expecting a Christmas rally. Of course, here we are right now, so this is the time and place where it should start. Then looking at the VIX, we expect the VIX to sell off into year end with a little bump in the middle of December. And then looking at the commodity seasonality, starting off with crude oil. Crude oil should continue to dip into the first week of December. It pulled up this week. It's still on a weekly sell signal, so that has not changed. It's still a very bearish chart pattern here. We've got a series of lower highs and lower lows. We're right in the middle of the range at the moment, and looking to see if that pattern will change over time. Unfortunately, the pattern for natural gas right now coming into year end is not very bullish, and it may have put in a lower high this week. So that pattern continues of a series of lower highs and lower lows. And then looking at the seasonality of gold, gold should ramp up into the first week of December and then pull back a bit and then ramp up again going into the end of December. It had a great week this week, up $142.70. It's back on a weekly buy signal. We're trying to get to 28.1250. That was where we peaked out recently. If we can take out the recent high, then 29.6875 would come into play. And of course, once you get up in that area, then everybody's looking for 3,000, which would be the big round number. Now, looking at our current panic zone projection, we're projecting down to the 2150 level sometime in the spring. And that is certainly doable mathematically, especially if you can envision a left and right shoulder here. So let's say this is the left shoulder, this is the head. We make a right shoulder out here, we break the bottom of that line, and then there we are. We're down at the 2150 level. Of course, none of this has happened yet. And the fact last week we got a right side sell signal, we're going to need more selling. We're going to have more conservative investors give up on gold. And that certainly did not happen last week, and it's not going to happen this week. And, anytime that you're looking at a projection, you've got to remember that the projection doesn't know what it doesn't know. And as we go forward, yes, this projection is based on the current mathematical probabilities and the current trading patterns of this particular symbol. But at the same time, there's a lot that goes into moving the price of gold. What if the US dollar changes direction? Right now, it continues to move higher against all the other currencies, which continue to drop. How long can that last? If that changes, will that affect the price of gold? What about interest rates? Bond prices are currently on a weekly sell signal. Bond yields are currently on a weekly buy signal. What if those change? Will that affect the price of gold? And then, of course, you have all the world events and everything else going on. So a projection can only give you a rough estimate of what might happen. It certainly is not written in stone. Now, while we're looking at the seasonality of gold, we should also look at the seasonality of gold stocks, and we can use the Philadelphia Gold and Silver Index, the XAU, to take a look at that. Where we are right now, we're looking for gold stocks to move up into the first week of December and then to sell off into the middle of December and then back up into year end. And that's pretty similar to what we expect for the price of gold. Now, it's very important that if you are trading or investing in commodity stocks, that you focus on what you own. And why I'm saying that is if the price of gold is going up and your gold stock is going down, don't think about holding it because the price of gold is going up. They're not the same thing. They can sometimes move in sync, sometimes they don't. The price of gold could fall and your gold stock could rise because people think that it's going to get a takeover offer. You need to stick with your stock. Don't worry about the price of gold if it's going down and your stock is going up. The only thing that you really need to be responsible for is managing the stock or ETF, whatever you're following. You need to manage that and ignore what else is going on. It's nice to think that if the price of gold goes up, your stock will go up, but that is not always the case. Now, we are coming up to month end, and I've always mentioned that month end has a bullish bias to it. It has a bullish bias for several reasons. One is the professionals in the market have to clean up their act before month end. And the other reason is that we've got automatic money hitting the market. If you've ever had an automatic withdrawal taken out of your paycheck to go into a retirement account, that happens around month end. So traders know that that money's going to hit the market. It's going to hit it on the buy side, and there's no reason to try to trade against that. So if we look at the seasonality of the XAU Gold and Silver Index, one thing you'll notice is that most of the monthly lows happen in the middle of the month. So on 8 out of the 12 months, and this is a seasonality chart, so this is an average of averages, you're going to see the low in the middle of the month. And that's what I'm always used to. That's the way I think about the market is if you're going to see selling, it's going to be aggressive in the middle of the month. Now, what about buying? Well, if we look at this chart, 9 out of the 12 months, we see buying going into month end. And it may not be the actual high of the month, but typically you've got money coming into a market at month end. And that's the way that I always think about the market is I really don't want to be an aggressive seller going into month end. And I certainly don't want to be an aggressive buyer going into the middle of the month because that's usually where the lows are made. So we wait till the market makes its move and then starts to turn in our direction before doing anything. But when we come into month end and I say it has a bullish bias, that's what it looks like. Let's take a quick look at some of the charts we haven't looked at in the U.S. market. We had the Russell 2000 up 4.5%, not enough to take out the previous high. Unlike the small caps, which were up 4.64%, they did make a new closing high. And then we've got the micro caps up over 5% on the week, not enough to give us a new high there. For semiconductors, looking at the SMH ETF, we're still on a weekly buy signal here, up nearly 2% on the week, not enough to give us a new buy signal. And then just looking at the financials, U.S. banks, U.S. regional banks were all up on the week. And that's a pretty good sign the market is in a pretty healthy condition at the moment. Moving on to the Canadian market, we looked at some charts already. So there's the small caps up over 3% on the week. We had the micro caps in the venture exchange up over 2.5%, having an inside week, so no change in trend there. Then we've got the financials up 1.26%, while the banks were up over 2%. So banks leading the rest of the financials. Now, before we finish up today, I just wanted to take a quick walk down memory lane, and we don't have to go too far back to see a similar situation to what we're in right now. In 2021, we ended the year on an all-time high for the S&P 500. We're up at 4,800 on the S&P 500. And then what happened in 2022? Well, this is what happened in 2022. So just be aware that things can change fairly quickly. This no guarantee this is what's going to happen next year, but it could certainly happen, especially going into year end with everybody feeling as good as they're feeling at the moment. Of course, when that happens and things turn red and we get the sell signals in the major indexes, we do not have to go to cash. We have the option of buying the bear ETFs. In the US, we have the option of buying 3X ETFs, even a 4X ETF. So that moves at 3 times the movement of the market. And of course, this week it was down as the market was up. So you've got 3X for the S&P 500 for the NASDAQ. On the Canadian market, you've got those similar choices, plus the TSX 60, which made a new all-time low on Friday, down over 4% on the week. And of course, if the market starts to turn down, these will start to turn up, and we can make use of those. Looking at the Beta Pro Bull ETF, of course, it's ranked at 10 right now, up at the top of the panic zones, and the Bear ETF's ranked as 0, down at the bottom of the panic zones. And of course, the trend has not changed so far. We don't need to do anything at this time. It would be foolish to put money into a bear ETF right now with the momentum still against us. We want it to turn around. We want a buy signal before we jump in, but it is an option. It's an option we don't have to take today, but it is an option we can keep in our back pocket. And when the market does turn around, like it did in 2022, we can make money on the way down. Okay, folks, that's all for this weekend's presentation. We are coming up to month end. So far, everything looks pretty good. The market was not impressed by NVIDIA's earnings last week. At the same time, it wasn't overly disappointed. So that's probably a good thing going forward. Hey, if you want to be a superhero, especially if you want to be a superhero before the end of the year, check that off your to-do list for 2024. Start donating blood on a regular basis. You can be a superhero. Doesn't take more than an hour or so, and it certainly gives you a mind break during the week, and you'll help save somebody's life. So please consider being a blood donor. Thank you very much for your time and attention. If you have any questions, just drop me a line, and I'll get back to you as quickly as I can. Enjoy the rest of your weekend. Next time you'll hear my voice is on Monday morning.